They told us legal weed would be the biggest financial windfall of our generation, a green rush, an industry so profitable it would crush cartels and make billionaires overnight. Instead, the whole thing is going up in smoke. Billions of dollars in value has been wiped out, and right now if you walk into a legal dispensary, there's a 75% chance it is losing money. This isn't just a downturn, the legal cannabis industry is being systematically destroyed from the inside out. Chapter 1, the $131 billion ghost town. When cannabis was legalized, the promise was simple: massive profits, fast growth, and a new corporate industry overnight. Instead, over $131 billion in shareholder value has been wiped out. Dispensaries across the country, in Los Angeles or Denver or Detroit, are bleeding cash. And according to Whitney Economics, only 24% of legal cannabis businesses are currently profitable. In any normal industry, that failure rate would trigger congressional hearings and emergency restructuring. In cannabis, it's become the operating baseline. Failure has nothing to do with Americans wanting less weed. The collapse traces back to one fundamental error.
Did a promised multi-billion-dollar gold rush just turn into a trap?
Investors completely misunderstood the product they were selling. They thought that they were buying the next Apple, the next Anheuser-Busch, the next Starbucks. What they actually bought was a heavily regulated agricultural commodity. It's closer in nature to soybeans, pork bellies, or timber than to consumer technology. And that mistake begins with some of the smartest people in finance making the simplest possible error in judgment. Chapter 2, the green rush illusion. In 2014, Colorado opened the first recreational market in American history, and the results were immediate. The stock charts went almost straight up, and venture capital did what it always does when numbers move like that: it chased the next platform wave, the next big bet. Soon, the floodgates opened. MedMen opened a flagship store on 5th Avenue in Manhattan. It was a slick operation with polished concrete floors, iPads on every counter, and staff in matching red shirts. The pitch to investors was explicit. This was the Apple Store of weed. But the ambitions didn't stop there. Justin Hartfield, the founder of Weed Maps, framed it differently. He was going to build the Yelp of marijuana.
Why are legal sellers losing everything while demand is at an all-time high?
Others went even further, casting themselves as the Procter & Gamble of cannabis. They promised to consolidate a fragmented market under a massive house of brands. Each raised hundreds of millions of dollars on that promise. Then, reality showed up. Cannabis isn't an iPhone. Artificial scarcity doesn't hold. There is nothing stopping a competitor from growing the same product just a few miles away and selling it for less. In major legal markets, wholesale cannabis prices have collapsed by roughly 85% since 2015. To understand what that means, imagine milk dropping from $4 a gallon at the start of a decade to 60 cents by the end. In any other industry, that kind of deflation would trigger alarm bells. In dairy, it would be a crisis. In the weed industry, it became the default. And it happened in under 5 years. MedMen filed for bankruptcy and was sold for parts, a company once valued at nearly $2 billion. At its peak in early 2018, MedMen stock traded above $7 a share on the Canadian exchange. By 2024, when the company collapsed, it was worth less than a penny. Tilray stock has lost more than 95%.
What is the dark government secret crushing independent local businesses?
5% of its peak value. The Apple Store of weed sold a product no different from a bag the kid in high school sold out of his backpack, only with a 38% tax on top. But oversupply was only half of what killed them. The other half came from the entity that was supposed to protect them. Chapter 3, the IRS death sentence. In 1981, a drug dealer named Jeffrey Edmondson walked into the United States Tax Court in Minneapolis and won. The IRS had caught him and tried to tax his underground income, so he decided to fight back. He listed himself as self-employed. He even tried to deduct the cost of his scale, his rent, and his phone calls as ordinary business expenses. The judge looked at the tax code and ruled in his favor. The deductions were legal and the income was taxable. The IRS had to allow them. A criminal court was less generous. Edmondson was sentenced to 4 years in prison for cocaine distribution, but the tax case stood. Congress lost its mind. Within months, lawmakers wrote a single paragraph into the Internal Revenue Code designed to make sure drug dealers couldn't pull that stunt again. They called it
How did billions in stock market value vanish in just a few years?
Section 280E and had Pablo Escobar in mind. 43 years later, the people paying that bill are middle-aged retail entrepreneurs in California, Colorado, and Michigan. Mothers with mortgages, veterans on second careers. The Pablo Escobar law applies to a 58-year-old woman selling pre-rolls in Sacramento. A normal business making $1 million in profit pays the IRS roughly $210,000. A dispensary making the exact same profit pays $700,000. The law was designed for cartels, but it's applied to the corner store. And that's just the federal layer. By the time California stacks excise, sales, and local taxes, 39 cents of every dollar in an LA dispensary is gone. And that is even before rent, before payroll, before anything. 2 blocks away, a bottle of bourbon is taxed at less than a third of that. Tax something this hard and people don't stop buying, they just stop buying legally. And that alternative market exploded. Chapter 4, the Shadow Empire wins. California's illicit cannabis market moves roughly $8 billion a year. That's enough to fund the entire annual budget of the DEA twice over. The legal market moves $3.9 billion. In the state that pioneered medical legalization earlier than any other in America, the Underground won. A legal dispensary on the corner sells an eighth of premium flower for $65. An unlicensed shop 2 blocks away.
Is the black market actually winning the economic war against legal shops?